Let's dive in and unravel what really happened. Imagine SoftBank Group, a giant in the tech investment world, confidently moving forward, until on December 11, 2025, it suddenly slams the brakes. The company, known for its bold bets and high-profile deals, found itself at the center of a financial storm. That day, SoftBank's share price nosedived by 7.7%, the steepest fall among all companies on Japan's Nikkei 225 index. Investors and analysts watched in disbelief as the numbers tumbled. But this wasn't just a random market hiccup. The real trigger came from across the Pacific. Oracle, a major US tech player, released a disappointing financial report that sent shockwaves through the industry. Oracle's shares plummeted more than 10%, and the aftershocks didn't stop there. The ripple effect quickly reached SoftBank, exposing just how interconnected global tech investments have become. For investors who had pinned their hopes on SoftBank's ambitious push into artificial intelligence, this was a jarring reality check. The promise of AI-fueled growth suddenly seemed a lot less certain. The stocks plunged to 17,210 yen per share, erased billions of dollars in market value in just a matter of hours, leaving portfolios battered and nerves frayed. It was a stark reminder that the journey toward AI-driven riches is anything but smooth, full of unexpected twists, sharp turns, and sudden drops that can catch even the most seasoned investors off guard. When a heavyweight like Oracle stumbles, the impact ripples outward, shaking the entire AI ecosystem and reminding everyone how fragile these connections can be. For SoftBank, which has gone all in on the AI revolution, this was a sobering moment. Was their grand vision built on a solid foundation, or was it more vulnerable than anyone wanted to believe? The market's message was clear. Even the boldest bets and the most visionary dreams can hit a wall when the unexpected happens. In the world of high-stakes tech investing, nothing is guaranteed. Why did Oracle's news rattle everyone? It wasn't just another earnings report. This was a wake-up call for the entire tech sector. Oracle, a giant in the world of enterprise software and cloud infrastructure, is often seen as a bellwether for the health of the broader technology market. Think of Oracle as the builder of the garages, data centers, where AI lives. These massive facilities are the backbone of the digital world, powering everything from chatbots to complex machine learning models. Without them, the AI revolution simply wouldn't be possible. The market expected booming business, with AI demand driving Oracle's growth. But instead, Oracle's report was all about huge spending and uncertain returns. Investors were hoping for clear signs of runaway profits, but what they got was a reality check. Profits were slightly up, but revenue missed targets, and the outlook was gloomy. The numbers didn't match the sky-high expectations set by months of AI hype, leaving many to wonder if the growth story was overblown. Investors saw a red flag. The AI hype isn't translating into easy profits. The disconnect between investment and returns became impossible to ignore, and confidence started to waver. Oracle's plan to boost capital spending from $35 billion to $50 billion by 2026 only added to the anxiety. That's a massive leap, signaling that the company expects the race for AI dominance to get even more expensive. The cost of competing in AI is soaring, but the payoff looks less certain. Companies are pouring billions into infrastructure, but the timeline for real sustainable profits keeps getting pushed further out. This toxic mix spooked investors, especially those like SoftBank who bet big on AI. The fear is that the AI boom could turn into a bust if the economics don't improve soon. The message was clear. Building the future is expensive and the returns are far from guaranteed. Every new data center is a gamble, and the stakes are only getting higher as competition intensifies. Suddenly, everyone was asking if the AI gold rush was just burning cash, or if there's still a real fortune waiting at the end of this high-tech race. Let's look under Oracle's hood. Their quarterly profit per share beat expectations, but total revenue fell short. The real shock was Oracle's downbeat forecast for the next quarter. Growth was slowing. This clashed with the AI revolution narrative and made investors nervous. If AI demand is so huge, why isn't Oracle seeing stronger sales? Meanwhile, Oracle's debt is piling up to fund its expansion. Borrowing to grow is normal, but risky when revenues lag. Analysts flagged Oracle's debt as a growing concern, especially with spending set to rise. Missed targets, weak outlook, and ballooning debt created a storm of doubt. Oracle's struggles weren't just its own, they signaled trouble for the whole AI industry. The gold rush might be pricier and less profitable than anyone thought. Oracle's drama exposed a deeper fear: the staggering cost of the AI boom. OpenAI, for example, talks about needing over $1 trillion for AI infrastructure in 5 years. The question: is there a business model that can pay back such mind-boggling sums? Even with amazing tech like ChatGPT, profitability is murky. The industry looks like an arms race, spending more just to keep up, with no guarantee of winning. Oracle's financial strain, despite a prime deal with OpenAI, made everyone nervous. If OpenAI can't pay for its computing needs, Oracle suffers, and so does SoftBank, which has bet everything on OpenAI's success. It's a chain reaction, one weak link, and the whole system wobbles. Investors are now demanding a real plan for making money, not just hype. To understand why SoftBank's shares tanked so dramatically, you need to look closely at the powerful triangle formed by SoftBank, Oracle, and OpenAI. This isn't just a simple partnership. Each company's fate is tightly linked to the others, creating a high-stakes financial ecosystem. OpenAI is the innovator here, with cutting-edge technology and ambitious plans. But to turn those plans into reality, it needs two things: massive amounts of cash and access to world-class computing power. That's where Oracle comes in. Oracle builds and operates the advanced data centers that OpenAI relies on, making OpenAI its single largest customer and a key driver of Oracle's future growth. If OpenAI's business booms, Oracle stands to gain big. Its profits and stock price could soar as demand for its infrastructure grows. But if OpenAI stumbles or scales back, Oracle could be left with expensive, underused infrastructure and a major hole in its revenue stream. SoftBank, meanwhile, is the financial powerhouse, pledging up to $40 billion to fuel OpenAI's growth. This is one of the largest bets in tech history. This isn't a casual investment, it's a focused, high-stakes wager that could reshape the tech landscape if it pays off, or cause massive losses if it doesn't. The flow is simple but powerful. SoftBank funds OpenAI, OpenAI pays Oracle, and Oracle builds the infrastructure for OpenAI. Each step depends on the others. So when Oracle's financial results looked shaky, it sent tremors through the entire triangle, raising questions about the stability of the whole arrangement. Investors started to wonder, if Oracle is struggling, does that mean OpenAI's growth is slowing? Is the demand for AI infrastructure weaker than expected? And if OpenAI is in trouble, what does that mean for SoftBank's massive, headline-grabbing bet? The risk suddenly looks much bigger. The risk is shared and the connection is direct. Each company's fortunes are tied together, for better or worse. One stumble by any player and the entire triangle feels the shock. Like a row of dominoes, the impact spreads instantly. That's why when Oracle's results disappointed, SoftBank's stock took such a dramatic hit. The triangle's strength is also its greatest vulnerability. SoftBank's future is now tied to OpenAI completely. Under Masayoshi Son, SoftBank is famous for huge, concentrated bets. The $40 billion pledge to OpenAI is a statement of total conviction. To fund it, SoftBank even sold its entire stake in Nvidia, the hottest AI chipmaker. It's a bold move, selling the shovels to bet on a single miner. This all-in approach makes SoftBank extremely vulnerable to any bad news about OpenAI. There's no plan B. If OpenAI stumbles, so does SoftBank. The Oracle wobble was seen as an OpenAI wobble, and SoftBank's shares paid the price. The market's message: high risk, high reward, but also high danger. Let's meet the main players. SoftBank, Tokyo-based, led by visionary Masayoshi Son, famous for bold tech bets like Alibaba. It's not a maker, but a giant fund betting on the future. Oracle, American tech giant, once known for databases, now reinventing itself as a cloud and AI infrastructure powerhouse. Its strategy built the digital backbone for the AI era. OpenAI, the disruptor, creator of ChatGPT, aiming to make super-intelligent AI benefit everyone. Backed by Microsoft and SoftBank, it's the brains of the operation. The dynamic, OpenAI creates, Oracle powers, SoftBank funds. It's a three-way partnership. If one fails, all are at risk. Here's the big question. Can all this AI spending actually turn a profit? The tech is dazzling, but monetization is the real challenge. Training and running models like GPT-4 cost hundreds of millions. Daily operations cost even more. Multiply that across the industry, and you're in the trillions. Investors are asking, who pays? Subscriptions, businesses, ads? No clear answer. Oracle's disappointing results were a wake-up call. Even the shovel sellers are struggling. If infrastructure providers can't profit, what about the AI companies themselves? The fear. We're in a bubble, with hype outpacing real business. For SoftBank, it's a $40 billion bet that OpenAI will crack the monetization puzzle. Until there's a clear path to profit, the whole sector is walking a tightrope. So, what's next? The AI industry is at a crossroads. The era of pure excitement is over. Now it's about making the economics work. SoftBank's fate is tied to OpenAI's ability to deliver real revenue, not just headlines. Every bit of news about OpenAI now moves SoftBank's value. The stakes are massive. This could be a legendary win or a historic flop. The whole industry is watching. If OpenAI and its peers can make money, investment will surge. If not, we could see an AI winter where funding dries up. Companies must prove their AI tools are indispensable, not just impressive. The question remains, is this the next internet or just another bubble? Buckle up. The ride is just getting started.